Welcome to Paxeon Debt Elimination Services. Now that you've seen our video, let me show you how easy it is for you to start saving money on your home loan. At the end of the video, you are encouraged to calculate your savings. So let's do that and see just how much money you could save. We begin by clicking on Calculate Your Savings. And we're going to fill out this form. Put in your name. Your name is Sue. Your last name is Smith. We're going to put in your phone number. The referral code has to do with, did somebody from our company send you over to take a look at the website? And in this case, Scott, one of our sales associates, directed you to the website. So we'll put Scott's name in. We're going to put in your email address. It's sue@gmail.com. And you're going to choose a password and retype it and click register. You've now created an account that you'll continue to use in the future. Okay, now we're going to ask you for some abbreviated information about your mortgage loan, about your income, and your expenses. So in this case, what is the current balance of your loan? We'll say for this example that the current balance is $200,000. You're paying 6% interest, and you're making a monthly payment that is a principal, interest, taxes, and insurance payment. That means that your payment amount of $14.50 per month is broken down into $50 is set aside each month to pay your insurance bill when that's due, and $200 is set aside each month to pay your tax bill when it's due. The years remaining on your loan will play like it's a brand new loan, so there's 30 years remaining on the loan. Now tell us about your income. This is net spendable income. How much money do you make during the month? And we'll say you make $5,000. And then we need to know about your expenses. These are household expenses excluding your house payment. So in this case, we'll say your household expenses are $3,000. Okay, once you've put all this information in, you're going to click Submit. And we're going to give you a summary of your savings, and we're going to represent it in a graph for you. You can see that the yellow represents the 30 years that you would be paying your mortgage if you weren't using our program. And the 14.25 years represents the number of years you would pay your mortgage payment if you were using our program. If you use our program, you'll save $138,414.57. You're going to save 15 3/4 years on your house payment and pay off in 14 1/4 years. We've activated your account so that you can continue with the development of your detailed payoff plan. So let's begin by logging back into your account. You're going to use the information that you used when you calculated your savings. The first time you log in after we've activated your account, we're going to ask you to update your setup. This means that we need you to give us some more detailed information about your mortgage loan, your income, your equity line, your expenses, and etc. All the information that you previously put in is still there. You can change it if you need to, or just leave it if it's correct. So we need to know what your original loan amount is. Remember I said it was a brand new loan, so the original loan amount is $200,000. We have the balance at $200,000, 6% interest, a principal, interest, taxes, and insurance payment of $1,450, $50 towards insurance, $200 goes towards taxes, and your monthly payment due date is the first of the month. And your payment grace period is the 15th of the month. Now a grace period is that time between when your house payment is due, in this case the 1st, and when you would be charged a late fee, which would probably be the 16th. So that's kind of free money between the 1st and the 15th, and we're going to always pay your bills on time, but we're always going to pay them at the last minute. So that's your grace period. If you're unsure of what it is, take a look at your payment coupon, and you'll be able to see what your grace period time is. Okay, the original loan term is 30 years. Again, it's a brand new loan, and 30 years remaining. Now we're into the home equity loan information. Now keep in mind our program will work with a HELOC, a home equity line of credit, a personal line of credit, which is exactly like a home equity line of credit, except that it's secured by something other than real estate. It could be secured by a certificate of deposit at the bank, or possibly a stock portfolio, anything of value. And then our program will also work with a savings account. So let's first of all illustrate if you had a savings account and chose to use that, how you would enter the data. So let's say your savings account has $5,000 in it. So in the area where it says equity loan high credit amount, you would put in $5,000. Now you don't really have a balance, you just have a deposit balance of $5,000. So we're going to put 0 in this field. You're not being charged interest, so we're going to put 0 in that field. And you're not going to get a bill for an interest charge, so we put 0 in that field. Now that's how you would set it up if you were using a savings account. Now if you were going to use a home equity line of credit or a personal line of credit, then we'd want to put in the credit high limit, and we'll say it's $10,000. And then we'd need to put in what the current balance on your equity loan account is, and we'll say that that's $1,000. And the interest rate on the equity line account would be 4.5%. And if they send you a bill for interest on the equity line account, what day of the month would that be due? We'll say on the 20th. Now we need to know about your income. A little bit more. You previously told us that you made $5,000. But is that between one payment, 2 payments? Is that a weekly paycheck? Are you being paid bi-weekly? Now if you're not familiar with bi-weekly, that means that once a year you'll have a month where you get 3 paychecks. Now we're not going to ask you to tell us when that month is in the future. You'll just let us know when you do your monthly update when you've actually received that 3rd paycheck. So for this example, we'll say that you get 2 paychecks. Maybe one on the 1st and one on the 15th. Of $2,500 for the 1st, $2,500 for the 2nd. And then maybe you get a little bit of additional income. This is spendable income. Maybe this is alimony. Maybe this is net rental income. Maybe some interest income. We'll say $100. So your total income now is $5,100. And you previously told us that your expenses were $3,000 excluding your house payment. Okay, tell us about your credit card. What's the high credit limit on your credit card? And we'll say that it's $10,000. Now you could use 1 credit card, 2 credit cards. What we want you to do is try to use your credit card for all your household expenses throughout the month as much as you possibly can. And then we're going to schedule a payoff of your credit card when it's due. Okay, now put in your credit card balance. And we'll say your credit card balance is $1,500. Okay, now, and then what is the due date of your credit card interest payment? And we'll say that's the 13th of the month. Okay, so we filled out all the fields. We need something in each field, at least a 0. And now we're going to click Update. Now we're going to generate your detailed payoff plan. Now the information has changed slightly because we have more details of your finances. We've generated the graph again. There's the 30-year section in yellow. Well, you're now going to pay off in 13.67 years. Your savings are going to be $132,761.69.